The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me this evening. And good morning to our friends in one half of Australia. Good afternoon to the other half. And a couple of hours later in New Zealand. This daylight saving, boy, oh boy. Anyway, sound is fine. Thank you, Mr. Deck and Lockie. Deck is a pommy guy, and he's actually getting into the French Burgundy for dinner. So he sounds like he's having a fine time there. And the rest of you folks, there's my friend Hank's down in Singleton. Beautiful day down there. 33 up here, Hank. I'll be heading for the pool as soon as this webinar's over today. But lovely to have you with us, folks. Let's see who else is here. A lot of our usual friends, and met Akshay. I haven't seen Akshay for a long time. He's here. Alan up in Brisbane. He's a tutorial guy, great mate of mine. I haven't seen you for a long time, Alan. Alice, we have Alice Kwok with us, which is great. Brian B up in Weewar. He's a agronomist up there. Tutorial guy, a couple of Daniels, Donnie Maydell up in Canada, Donald Trump. Well, that's probably a shift, I imagine, but nice to have you with us, whoever you are. Hank, of course, that means Justin will be here somewhere. Janet, another lady. We're doing great. Johnny Barnes, tutorial guy. Yeah, there's Justin Woolley down in Singleton. Leon, Mark Andrews, Marty. Marilyn Boyd, greetings, Marilyn. Mike Olenek, he's a tutorial guy coming back to do a bit more. Mike Murphy, the same. Norbert, yeah. Peter Kane, we're going to get you to a tutorial soon, Peter. Lots of people here we know. Rob H. over in New Zealand, my mate. Great analyst, Rob. He really is a guy who takes a big view of things. Steve Castley up there in far, far North Canada, works in the oil field. Tutorial guy. Sue, we've got another lady with us. Toddy Timmons, known him for years. Let's make America great again. Resurrection, my friends. Resurrection for Donald Trump, at least. He was dead and buried, wasn't he? According to the liberal media. I'm not even sure that the Fox guys thought he was going to get up in their heart of hearts. But as I told you, the first foundation member of the International Trump Fan Club was Mrs. Needham, who, the minute he announced and walked down the elevator, she said, great, love this, hope he gets up. And that's because, of course, she's married to a trader, and we love chaos and contrarianism. But boy, the markets are loving Donald Trump. They're just, equities are just going gaga, as is the US dollar index. And we're going to explain all that to you and set out a few of the things that are going to come. So lovely to have you with us. Make sure I've started recording as I have, because I know there's going to be a whole lot of you who are not going to be with us today. We've got some good numbers today. Thank you, folks, for supporting us. But my guess is that a lot of people have started traveling Thanksgiving. Just a huge American holiday. And my guess is a lot of people are already on the roads or in the air or off to see their family and loved ones. Okay, and this, incidentally, I'm just waiting for this screen to change for you. It has now. This is a photo from the New Zealand Herald this morning, and this is Los Angeles Interstate 405 overnight. Have a look at it. You got the white lights, that's the traffic heading towards you, and the red lights are the ones heading away, and there's a complete gridlock both ways. I mean, it's extraordinary. I've driven up that highway. I've got some idea what it's like, but oh boy. Great fun. Not really. So those of you who are not on the road, you've certainly made the right decision. Okay. Let's move on and have a look. Folks, those of you who are thinking of doing a Daniel Code tutorial by video, this is going to be the last session for 2016. And we have some vacancies available. You should have all received a document about this. If you haven't, drop me an email. What this is teaching you to trade the Daniel Code trading system by video. And it seems to work very, very well. In fact, it works so well, I'll show you what our last guy who went through it has got to say. Email jneedham@thedanielcode.com if you are interested in doing this. We've got about 3 places still available. It'll all cut off on December the 9th. This is a guy called Mike who's just 3/4 the way through his tutorial, and this is what he had to say about it. Wow. You can read all the rest of it yourself. Interestingly, I had maybe a dozen inquiries to do the video tutorial, and when they got the documents, they didn't come back to me, and I suspect that's because the fee is $7,500 US, and that might have made some of them choke. You can in fact see in the first paragraph here that Mark's saying, I must admit, when I first inquired about the cost for one-on-one tutorial, I looked for every reason to justify why I didn't need a tutorial because of the cost. But those of you, if the cost is what's putting you off, we can give you some accommodation on the fees. You can pay a proportion of it, and I can carry the rest of it for 3 or 4 months if that helps you at all. This is a lifetime skill. If it's something you're thinking about, I really do urge you to do it. You're frankly never going to understand markets until you do a Daniel Code tutorial. And for those of you who haven't done one for a while, it's a great opportunity to update your skills, because a lot of what I'm teaching now, particularly with the time signals, is new for those of you who've some years since you've done a tutorial. You ought to think about that. But they have to end in early December. Because after that they do run on. It actually takes about 3 months to go through the whole tutorial process, because after you've had your initial 4 2-hour learning sessions, we then have another 4 1-hour sessions spread over a couple of months where I look with you at your trades, your sim account trading or your real trading, and we look at your losers. You actually don't learn anything in trading from your winners, but you learn a massive amount from your losers, because you have to reappraise what you're doing. And sometimes losers are just that. One of the true sayings about trading is, I was right and I lost money. That can happen, but as long as we don't have any that say I was wrong, then you'll find if you're right and you're with the trend and you can read the trend earlier than anyone else, you will make an awful lot of money trading futures. In fact, I had a conversation yesterday with a new tutorial guy who was very interested in stocks, as I know a lot of you are, and he sort of told me he sort of split up his finances for his investing into his short-term money, which he wanted to learn how to trade futures and forex, and his long-term money, which he wanted to have in stocks. And he asked me about stocks, and I said, yep. On the big stocks where there's no obvious controlling shareholder, Daniel Code works perfectly. The big stocks, Microsofts, the Googles, they just bounce off the Daniel Code numbers all the time. And he then wanted to talk to me more about stocks. And I said, look, I haven't traded stocks. I used to trade stocks. My father was a great man for stocks, and he's been dead for 40 years, and I haven't traded stocks since then. And he said, why? And I said, I'm risk averse. I'm frightened of risk, and I don't trade stocks because they're dangerous. And he thought that was kind of amusing. But I had a long conversation with him with the way company accounts are constructed. I was the chairman of 2 companies listed on the Australian Stock Exchange before I was 30. So I know a bit about this stuff. And I talked to him about the fallacies and pitfalls of auditors, the GAAP and non-GAAP accounting standards, how analysts promote stocks, why they do it, and the great fraud of all stock exchanges, that stocks always rise over a period of time. Of course, none of that is as it seems. So if you're risk averse, you should be trading futures and stocks. Once you get the Daniel Code right, you will never be on the wrong side of a market move. I know never's a big word, considering we only deal in probabilities. Everything we do is based on probabilities. We don't have any foresight, but we do have such a robust trading system that if you follow the rules, I guess I better qualify that by saying almost never be on the wrong side of a market move. So shoot me an email quickly if you want to get into this video trading for 2016, folks, because I don't know when you'll get another chance. The next chart, when it changes for you, is the long-term trend chart of US T-bonds. Those of you who've been with us for a long time have been seeing this chart since 2008. This is a Daniel Code time study. Rob just sent me a message, said one about stocks being riskier, GAAP and smoothing returns valuation methodology. Absolutely. We know a lot about that, Rob. You know more than most. Real problems in stocks, folks. They're not what you think they are. We might dedicate a webinar to talking about stocks, because I know it's a lot of interest to many of you and to many of your friends. And I'll give you the John Needham version of reality about stocks. It'll give you nightmares, but nonetheless. Okay, so this is T-bonds. You can see towards the right-hand side of the page, this market put in its high. One period from a Daniel Code 59 time cycle, which had been on that chart since about February 2010. This is a 24-day chart. In other words, each one of these bars is 24 days. This is our real long-term trend chart. And that time cycle originated back in January 2010. Now that one, that's the early one, July 2011, that cycle started. 59 cycle, these Daniel Code time cycles are valid for plus or minus one period. So you can see that the high came one period before the 59 cycle. That's quite acceptable and quite normal. Extraordinary that you've got a projection from sometime in June 2011 that gave you the high in 2016, but that's what it is. And look where it's gone. All this drama about bonds collapsing and what have you. It's not so. You've got to remember that the world today is driven by short-term cycle news media. And to be read or to be listened to or to be observed, you got to make it exciting. You got to make it sexy. You got to be extreme about things, which I never am. But when you take a look at the long-term chart, you can see that this market turned perfectly at its 59 cycle, and it's run down to its 50% retracement of the last swing. That's one of the Daniel Code retracement levels at 152.17. Absolutely perfect. So what looks like panic or drama at the rest of the world is just so predictable if you understand the Daniel Code and how it works. What is DEC? What's the 148 cycle mean? Well, it's the next cycle. It's one of the 59 cycles. You have probably forgotten what I taught you at tutorials, that the angel Gabriel, he raised his man clothed in linen, he raised his left hand and his right hand unto heaven, and he sware by him that liveth forever that it shall be for a time, times, and an half. And that is the next and half iteration of the 59 cycle in the Daniel Code. Okay, but there are other ones before that. If you really want to see the time cycles up to date, go to the Daniel Code website, www.thedanielcode.com, and have a look at the fourth seal, which is updated every week, and that will tell you exactly where the and when the upcoming times and price cycles are on the 6-day and 12-day and 24-day chart. And it tells you in some detail, which is interesting. So what's this market doing? It's stopped at the 50% retracement. That's a very normal retracement. And what it's really trying to do is it's trying to get back to the median. You can see that this market has been running up its Daniel Code long-term trading channel since 2000. It's pretty much right in there, little breakout above it for the last high, little burst of enthusiasm and exuberance, and now it's back trying to find the median. So if it breaks 152.17, you can expect its next support will be at the median, which you can see is somewhere around 150 or so. Here's the US dollar index. This has been on a real tear. I've been showing you this trend, this chart, I should say, for a long time. And just let me see what's happening over here. Terry from Melbourne, Terry Roberts has joined us. Hello, mate. Got a few people have come in late here. I'm sorry it started without you folks. Adrian, Adelaide, hope the baby's well. Hope that's all happened for you, mate. Nice to see so many old friends here. Let me go back to the other screen. I've been showing you this chart for months and months. Literally, it's been bouncing between the Daniel Code retracements from 93.39 up to 100.830, and it's broken through that now. There's a blue line. Now, these are not the members chart blue lines. Don't get confused. These are a proxy for the members charts blue lines. The blue lines on the members charts are created in an entirely different way, and they're very, very accurate. These are a proxy that I'm happy to show the public who come along to these. Oh, Adrian, look at this little girl, 9 months old. Aren't you marvelous? Well done. Congratulations to your wife and you, Adrian. Change your life, children, my friend. In my case, not always for the better, but there you are. That's just a in-joke. Wonderful stuff for you. Well done. Congratulations, my friend. These blue lines you see on these charts I do at these public webinars are a proxy for the Daniel Code blue lines. They are not the Daniel Code blue lines, which are very, very precisely accurate, as you'll see later in this webinar. But look what's happening here. There's a fair bit of upside here. Again, same thing. Make sure you're looking at a long enough term chart to get a real feel about the probabilities of markets. So let's move on to the next chart. Here it is. This is the same chart. This is the US dollar index, which for those of you that don't know is the US dollar against a trade-weighted basket of other currencies. This data I have only goes back to 1985, but you can see before Trade Navigator removed a lot of this data, going back in time, the dollar index been at much, much higher levels. And what it's doing now is it's just retracing the last swing, 100.840. This is the 24-day chart, has been breached. The next number is 102.450. And if we get a close above that, we start with the assumption that even higher levels, 108, then 115 are going to go. So for those of you who are in trade, dollar-sensitive industries, exporting or importing, you better have a serious thought about your hedging, although it's all a bit late for that now. But when you look at these longer-term charts, put things in perspective, there's nothing too exciting about the US dollar, except it's sort of doing what it should. Trump's election has brought a lot of optimism to the country, despite all of the prognostications about doom and gloom for markets if Trump was elected. They've just gone roaring up. There's a lot of excitement. There's the idea that there'll be big expanses in government activity. There'll be lots of infrastructure building, and that the dollar will be stronger, and that interest rates will rise because the risk, the biggest risk, is this dollar debt. Not only in the US, but for all countries. US, of course, is better served than any other to deal with it, but you have a situation where Obama has added more debt than all the other presidents combined. I mean, it's extraordinary. The debt growth in the 8 years of the Obama presidency is just absolutely extraordinary. Doesn't seem to be talked about a whole lot, but when you think of that and where the US total debt level is now, government debt, and you think about all the things Trump wants to do, rebuilding infrastructure, rebuilding the highways, the bridges, the airports, the tunnels, rebuilding the military. These are big, big dollar tickets. And they're going to require massive, massive amounts of money. Building the wall, my goodness, where's the money going to come from? Well, Trump is a very innovative guy, has a lot of his advisors. They're talking about public-private partnerships, all sorts of other things. But you need to remember also that you have the Congress, you have the House of Reps and the Senate. They're very jealous of their powers. They're not people who are going to say, yoo-hoo, the president can have what he wants. Mitch McConnell, tough old guy. He really thinks he's the king of the Woodhill. If it's not on his agenda, Trump's going to have some troubles persuading him. Yes, Obama inherited the debt from Bush by J.R. Goatherder. We've got some liberals here. That's great. We want to be ecumenical and welcoming to everyone, even people who are historically challenged. Good for you. So they're going to be the problems. It's not going to be all smooth sailing. As this US dollar strengthens, he voted for Trump. Well done, well done, well done, well done, goat herder. You're a good man after all. I'm an Australian, mate. I haven't even got a vote in America, so I'm immune to it. But well done, all of you. Whoever you voted for, it's all great fun. It's the best entertainment in town. One of the things that's going to happen is this US dollar strengthens. There's a lot of other currencies are weakening. The Chinese renminbi is just getting absolutely canned now, so it should. It's the least transparent currency. We have absolutely no idea what the shadow debts are in China. Nobody does. Even in countries like Australia, we're going to see, I'm going to show you that chart. Australia is one of the countries that's going to suffer very badly from a Trump presidency because it's really a very, very weak economy that's being masked by the most incredible housing prices. Whatever you thought you saw as a housing bubble in America and what you've got in San Francisco now, believe it or not, you can more than double that once you start talking about Sydney and Melbourne in Australia. It's really crazy cloud cuckoo stuff, and they have not repealed the laws of gravity. Eventually that's going to ease dramatically. The media and the industry have a vested interest in talking up property all the time because that's where a lot of the lovely lolly comes from, advertising for newspapers and other publications. Automobiles and cars, the biggest forms of advertising there is. So there's an inbuilt bias to always have the good news for those things, but it's not so. And we're going to have lots of fun in the next 12 months going forward as we see some of these things unwinding. Gold, I know, is always of great interest to our friends. I don't know if Boyd is with us today. He usually is. He's pretty much chairman of the Gold Bugs, along with let's see who's here. Rose, welcome, Rose. Gosh, we've got 4 or 5 ladies with us today. This is fantastic. Love it. No, I don't think the Goldbugs are here with us. Our mate in Reading and Boyd up in Canada, the chief Goldbugs. But have a look what this gold chart's done. Just look how accurately this is, how orderly this all is. You can see coming off the highs, it found the Daniel Code blue line at 1308. That held it on 3 occasions. This is the weekly chart. Then it broke that down to the red line at 1253. That held it and caused a rally. Back up it went to test 1308 from the other side. These Daniel Code numbers are like magnets for market. Then the big blow through that for the excitement around the presidential elections. Then down, down, down. I told you 2 weeks ago from when we looked at the fourth seal on gold that the trend was down, and that's what's continued for the past fortnight. And look where it stopped today, 1180.6, one of the Daniel Code retracement numbers. Unknown to you unless you know about the Daniel Code and how these numbers are calculated, but that just stopped this thing dead in its tracks. What happens to gold? Be very interesting. We've got some views on that, but it's certainly going to have a rally on the daily charts very soon, and I'm going to show you that as we go along. Let's move on to our next chart. We've got a whole lot to go through today. We want you to be prepared for this. Here's copper. Good, Toddy. You got the short in gold today. Nice. Nice. Let's see what we have here. What am I looking at? Yeah, copper. We showed you this chart 2 weeks ago with the big run up in copper, 10,700 odd. Then we had the first correction. We didn't take the first correction. I didn't put up any sell signals for that, although it was pretty obvious. One of the reasons was it was against a very strong trend. The other reason was, if you look at the size of this setup bar, it's way outside our risk parameters. So we didn't take the short, which was good. And we got back in long at the right place. And it's given us another little more. I put this chart together before we got our end of day data today. And it's about $3,000 to the upside on this second trade. So there's, the guts of $14,000 in 2 trades. And this is the gift of volatility. I can teach you exactly when to be long and exactly when to be short, but nothing in the Daniel Code speaks to volatility, which is why you have to be in markets and in a variety of markets, because when this volatility comes, it's just such a gift. That's why I'm so excited about good news or bad news, preferably bad news followed by good news. And then you get the turnaround that it gets all the pro traders wrong. And that's when you get this great volatility. So it's fabulous. So that's where we are so far on the copper trade. And just returning to our gold bugs, who I assume are going to watch this video later if they're not with us today, have a look at this inverse correlation between gold and the US dollar index. So we've got 2 charts together here. The top half of this chart is gold futures. The bottom half of this chart is the US dollar index. And have a look at this inverse relationship. This is a common occurrence. It's not an all-the-time occurrence. Sometimes this will end, this relationship, and they'll start moving in the same direction. But this is inverse correlation. As the dollar weakens, gold goes up. As the dollar starts to strengthen, gold goes down. Now, it's not a perfect correlation by any means. You can see that. I'll bring my tool over here, which is called a spotlight. You can see here where we are at the end of today's trading on the US dollar index. It's making new highs compared to its old highs way back here in December 2015, whereas gold, it's making new lows for the year, but it's not even close to its old lows in 2015. So there is not a terribly high level of inverse correlation here, but there is that inverse correlation, and that's been in force for a long time now. It's something you gold traders need to take into account in your trading. In fact, you can actually create a slightly different US dollar spread instead of having it. The DX, that's this chart at the bottom, is the US dollar against a trade weighted index. If you change that slightly so that you're a little selective on which countries are included in that basket of currencies against the US dollar, you can actually trade gold without looking at it. You can trade it as the inverse of a slightly amended US dollar index compound. It's very, very interesting. So that's something to think about for you gold traders. Let's move on here. This is the S&P. This is the resurrection, isn't it? We said when we got our failure signal back in February, our first failure signal, I said the highest probability is we get a big long consolidation here, and that's really what we've had. But now we've got this market breaking out to new highs. I'm going to show you the actual chart because on this snapshot, which I needed to do to get it to fit onto a PowerPoint. The numbers are a bit blurred, but you can see that we had a resistance level. You've seen this chart a number of times before. This is not something new. It's just updates that we had this price level in here, which stopped this market in about February, March 2015, and then it came back and it held this same level for a few days. This is a 24-day chart, so each of these bars is a month, and now it's moved up to the next number, 2196 is where it's, and we get a close above that. Look where these next numbers are. There's a very, very big gap up here. One of the tutorial guys I was talking to yesterday was saying Dow 20,000 by December. Now, I'm not in that sort of camp. I'm more in follow the chart and just see what it does with the medians. So right now this market is tracking up this dotted red line, which is one standard deviation below the mean. It's recovered that quite successfully from its breakout below 2 standard deviations from the mean. The next thing it's going to do is recover this next dotted line, which is the mean. And you can see, I'll show you when I pull this up, this market has run perfectly inside a Daniel Code trading channel ever since the lows in 2009. So what markets do now, if this is going to continue going up, this is going to be its next target around this next line up. And that looks very probable. I put up a chart of Dow futures just because I know a lot of you trade the Dow futures. This is a slightly amended Daniel Code trading channel. It's not actually starting from the low, but it's amended for a different reason. But you can see that Dow 20,000, this has been down to 2 standard deviations from the mean on the downside. And Newton's law tells us that the probability is it goes 2,000 2 standard deviations from the mean on the upside eventually in time, and we'll know that time when we do a 4th and 5th seal analysis. But 20,000 is not such a stretch. Alan, I was talking to you yesterday. 20,000 is not such a stretch for this market, and I thought you might like to see that. Okay, let's move on. S&P E-mini, this is the resurrection, isn't it? I showed you this chart 2 weeks ago. We had the sell signal on the day of the election, and down it went. I told you that when you get that sort of volatility, you need to use a trailing stop. And if you followed that, you're locked in the best part of $4,500 to the downside. Mandatory stop and reverse. Must take the stop and reverse if you possibly can. And that's given us another almost $3,000 to the upside without even a one-day counter trend. And look what's happened up there. Look where this is closed. The members chart has a blue line at 2201.25. Excuse me. I'll just have a look on the other chart so I can be accurate. 2201.25. And this market opened at 2201.25 and closed at 2201. Pretty extraordinary stuff. This is very, very accurate target recognition, as was the last bar. Tuesday's bar also closed at 2201.50. So we can expect a reaction soon for other reasons. This I thought was a really interesting chart that I want you to see, which will have changed for you. Now have a look at this. This chart is natural gas, and one of the interesting things about commodities, now remember this does not apply to indices. Indices are artificial constructs. This is natural gas. This happens in commodities all the time. And you can see it most clearly when you're dealing with commodities that have a lot of contract rollovers. You'll see at the bottom, along the bottom line of this chart, there's the letter R for rollover in a diamond. It's in a light blue color. And all of those letter R's are contract rollover. And I touched on this Dow, caught this here for Dow, S&P up or downside, more probable in the near future. Let me get to that, Ahmet. I'll get to all of that. But this is something that happens in commodities all the time. And what I've done here, I'll get the highlighter to show you. It's very interesting. These unlined, the sort of the start of this wedge, is where the option writing period for this contract starts, and the thin point is where the contract rolls over, plus or minus 2 or 3, or at most 4 days of that contract rollover. Contract rollover is not itself a terribly exact science because it's actually determined by when the volume moves into the next month. Some of the markets are very, very exact historically, others not quite so. But you can see this close of the contract is way outside the range of the rest of the contract. The same thing happens here, even though this has an up-down leg in it. Look where this contract closed down here. It's outside every other day in the contract. Same thing here. This is the start of the option writing period up here. This is where this contract closed in one of these days in about here. This is about 3 or 4 days before the contract rollover, but it's the options expiration period, and it closed outside almost entirely the whole range. Same thing move on here. This is the start. This open part of the wedge is just a picture I've drawn to indicate the start of the options writing program. This is when it closed up here. Now, this one's exaggerated a bit because there's a contract rollover in there. But if you looked at the front month for that contract, you'll see that in the same way on rollover, it closed outside the range of any other bar during the whole of that contract period. And here's the October contract. Here's the same thing. This contract period opens up here, goes down all the way back. Look where it closes. This is the close actually under here. I've mistaken this a bit, but go back about 5 or 6 days. This is where all the contract closeouts happened. Again, outside the range of any other bars there. Here's the latest period. This is the contract writing starts here. This is rollover out here. So this propensity of markets to change trend at rollover is quite extraordinary. And the implications it has for options trading is also extraordinary. And I did a webinar on that called Power of the Options Writers, just to tease you all a little bit into thinking about it. And seeing if you could get your heads around it. But that's why markets have these patterns. Why do markets go up and down and up and down? They're testing and retesting Daniel Code targets, and that's what they do all the time. And the good news is that although this looks terribly random, it's not. Markets, fortunately, there is an infinite number of patterns. But fortunately, markets use the same 5 patterns all the time, all markets. And all of these things are driven by the Daniel Code support and resistance levels exactly. So you can make sense of it when you know the Daniel Code, but if you don't, then you probably are a believer in random walk or something else that is equally what happens when people who don't understand start making decisions. Anyway, great fun. Let's move on. Here we are. This is our next chart. This is gold. I showed you the weekly chart. I want to highlight what's happening in gold. You've had this run down, and you can see where it closed today. I'll just bring up the other version of the chart so I can be specific. The close today is at 1187.8, and you can see the Daniel Code blue line at 1187, and the break through the red line 1188.2. Put those together and average them, you probably get pretty close to 1187.8. In any event, this is very, very good Daniel Code target recognition. And I've been silly enough to put up a prognostication on this chart for you saying reversing soon. Now, today, Wednesday night in America, tomorrow's Thanksgiving, markets are going to be closed. There'll be no new signals for Friday because after we've had a US market holiday, we need a full day's trading to reset the charts. But watch for a reversal in gold and UST bonds. They're very close to reversal points, and I wanted to just make sure you were aware of this over the next few days until I can start posting new trading signals for you again. Let's look at the other markets that are of great interest at the moment. This is T-bond, same thing. Have a look at this for target recognition, folks. This market ran down here through lots of panic stuff. This is the election day, the big grey bar, 153.02. It found that on the close, then had a couple of days ginning around with that. One little day where it was support, broke through. Look where it's put its low in. Not quite as accurate as I would have liked. Markets can be a lot more accurate than this. This low is 151.19. The Daniel code blue line's at 151.23. So that's 4 ticks. There are 36 ticks in a point. So that's 4 ticks variance. I've got to say it's close enough to target recognition. Everything else is set up. Same comment as of gold. Don't be surprised if this market reverses very soon. Let's look at our next ones. This is my compliance statement, folks. Trading is risky. It's very easy to lose your money. If you haven't done a Daniel code course, if you're not familiar with Daniel code trading, it's very easy to lose your money very quickly. The best way you can inoculate yourself against that is to do a Daniel code tutorial, and we'll certainly teach you how to be with the trend all the time. Okay, let's free trials. Any of you not familiar with the Daniel code, you're welcome to have a free trial, 31-day free trial of everything we have on the website, including the fourth seal, daily TO3, TO3 plus signals, and fourth seal in gold, US dollar, T-bonds, S&P, all the interesting things. All you need to do is go to the Daniel Code website, click on the free trial banner, register a username and password, email your username to Terry at support@thedanielcode.com, and he will switch on your Daniel Code library of studies. And also organize a 31-day free trial of everything on the Daniel Code website for you. If you haven't already had a free trial of Trade Navigator charts and software, we can organize a 31-day free trial of that for you as well. I've been using Trade Navigator charts and software for many, many years, and I found them very good. And let me see, I can probably show you. Let's go to the Trade Navigator website. Here it is, Genesis Trade Navigator website. They're having a holiday as well. Hope their website's working. It seems to be. You can click on partners over here, and then educators. These are the world-renowned educators. And you can see that I'm in the middle of it. So this is a bit of a rogue gallery of all the leading educators around the world. I know a lot of these guys. Most of them are very good guys. They all are proven. Otherwise, they wouldn't be becoming Trade Navigator partners. So yes, I've used Trade Navigator for a long time. They've done a lot of work with us over the years, including creating some of the Daniel Code programs. So do feel free, if you haven't already had a free trial, ask Terry at support@thedanielcode.com, and he will organize a free trial for you. That photo, incidentally, the good-looking bloke down here in the sailing jacket, that's me on board my yacht Sidewinder in the Bass Strait, halfway between Sydney and Hobart. in one of the longest ocean races of the world, which was my passion for many, many years. So I'm a good-looking guy, mind you. That was 15 years ago, but I learnt from Larry Williams: never update your photo. Okay, all right, that's all good fun there. So let's move on. I wanted to show you these long-term trend charts. Ahmed wants to know if it's upside or downside in the near future. Well, if you follow the Daniel Code trading signals, Ahmed, you'll be with the trend all the time. What's the big risk? Okay, we're going to have a bit more enthusiasm, I'm sure. The big risk is simply the liquidity, and with the US dollar going up the way it is, the US Fed has come out and said we have to raise interest rates for credibility. I mean, that's an extraordinary thing to say. It's like saying, I can't say it, there are ladies here, but everyone else thinks I'm a dope, but I'll raise interest rates because of what the market's done. It's crazy, but if there's going to be a big infrastructure plan, there's going to be big borrowings, it's going to have upward pressure on interest rates. And there's certainly going to come a time when that's going to impact on the market. But I suspect that's some way down the road yet, Ahmed. I think at the moment there is very little risk to the downside, apart from a correction we had today. We had a sell signal in the NASDAQ, and that was elected and made a few bucks. We had a couple of other interesting signals today. But you're going to have to differentiate. I think we're going to start seeing divergence between the European indices and the American indices, which we haven't seen for many, many years. I think Europe is very weak. I think there's lots of downside risk for Europe, ex-Britain, and I think there's masses of downside risk for Australia. I think that's the Australian dollar has been a great short and is again now. Longer term sort of hedging strategy type short. I think the US indices go up. I think the honeymoon runs for a while with Mr. Trump. I think what will steady that off is when the rubber hits the road. In other words, when he's got round to actually formulating the details of how these policy statements are going to be implemented, what it's going to cost in dollars, and getting Congress to get their head around that. I suspect he's all right in the reps at the moment. I think he's got Paul Ryan pretty much cowed, or at least under control, or on side might be a kinder word. I think cowed is the real one. What's Dex say? It's an idiot's way to go. History proves the Fed always follows the market. That's right. It's a bit late this time. But I think the Senate's another question altogether. And I think once the reality that all these policies he's enunciated, I like them. I mean, they're very, very sensible. They economically they make sense, but how is it going to be funded? And it can't be funded without an increase in interest rates, in my view. Our housing bubble is so overblown. Canada, it's already starting to deflate in some cities. Australia, now Sydney and Melbourne, now the most expensive real estate in the world. How could you possibly believe that? But it's true. Parts of America having big property booms. Sweden, absolutely insane property bubble in Sweden, other parts of Europe. That's where it's going to hit, folks. So watch that if you can get your head around. And I don't just mean a blip or a leveling off. I mean some real serious topping action in property prices caused by rising interest rates. I think we probably all underestimated how sensitive mortgagors are to interest rates, the mortgagees rather, how sensitive people are to interest rates. Any serious rise in interest rates is going to hurt a lot of people, and it's not going to take much to break that level of confidence. If you look at the countries that are having these massive, massive property booms, Australia, New Zealand, Sweden, parts of America, Canada, they've all got one common factor. They've got all-time record immigration. And you keep bringing people in, and they keep buying in maybe the third quartile or the fourth or fifth quartile. If you're stoking the fire below the median, the flames will go upwards, and that's what's been happening. Australia is now running at the historically highest immigration levels of all time. We have an agreed immigration intake of 125,000 a year with the UN. Remember, this is a country of about 23 million people. So 125,000 is 0.1%. It's big, but in reality, we're taking in through various other means 400,000 or 500,000 people a year, and all those people are competing for somewhere to live. Same thing in New Zealand, Rob, as you'd know. Absolutely nuts. And of course, where do all the migrants go? Where the work is. They go to Auckland, New Zealand, Sydney and Melbourne in Australia. Canada, you people would know better than I do. But cheap homes in Syria. Mr. Goatherd, you have a good, nice sense of humour there. Okay. Let's see, what am I missing here? There's a few questions coming here which I want to answer for you as we go along. I can certainly answer this next one. Mr. Drago said there was a sell signal for NASDAQ. Can you tell where this signal appeared? Yes, I can. It was a TO3 sell signal posted for Tuesday, 11:22, and valid also for Wednesday, 11:23, elected today. Okay, TO3 signal. That's on the website. Okay, so that's going to be the risk. Not yet, but it's going to come. Just so watch about sensitivity to retail interest rates, which are driven ultimately by government bond rates. This is, I wanted to show you in more detail, the S&P, dollar SPX. This is the index. These were these numbers that we couldn't see at the beginning. There's my email if you want to do a tutorial and you need some financial accommodation or otherwise, email me, jneedham@thedanielcode.com. Okay, we separate these. You can see how back here, this was June 2015, July and August, how this market absolutely stopped in its tracks by this 213046 line. As I repeat, this is not the members blue line that you see on Melbourne members charts, which are so precise. This is a proxy for them. It's an approximation of them that I'm happy to share with the public when I do these webinars. The next level up was 2196, where we've breached that now, and have a look at what's above you. There's an awful lot of daylight, isn't there? There'll be lots of minor cycles in there, but the next major cycle is up towards 2500, 2482. Big gap up, and plenty of upside for this market, the S&P. The Dow was the other one for you, Mark. Yesterday we were talking. Here's the Dow. This is the mini Dow. Let me take this off and show you where these next targets are for the Dow. There's a few overlapping, so we'll have to unscrunch them. And here's, as you think, 20,000 by December. Well, don't know about that, but 20,000 and 30 is the next target up, next major target up. Then 21698, and then 22404. So that's quite within the realms of possibility. A better way of looking at markets, I know that that's just a bit of chat, but the real way to look at markets is have your Daniel Code trading channel on them. Make sure you know how to draw these, because they're not. That is the last valid point here. Let's see if we can expand on this a little bit. No, that is the last point we can take it to have a valid Daniel code trading channel. Once we get that, we can see the drop down, and we can see once we go past 1, then we get to 2. So you see this market, when it made its minor correction here, it went to 1 standard deviation below the mean. Next correction, 2 standard deviations below the mean. And then all of these are fighting desperately to stay inside. And right here, in February 2016, we got the first signal of a change of trend, a close outside 2 standard deviations from the mean. Interestingly, that if Einstein's law works, as it usually does, not Einstein, the great Newton, Sir Isaac Newton, the father of science, and also one of the first guys to look at the data surrounding the Daniel Code, which he did, and he looked at a different section of the book of Daniel, and he wrote a piece about it called Observations on the Prophecy of St. John. Essentially, he's doing the same thing as I did with the Daniel Code. He's using numbers and interpreting the hidden meaning of those numbers. But Newton's law of motion, of course, one of the basic foundations of science. Any action has an equal and opposite reaction. We have had already a close below 2 standard deviations from the mean, which implies that sometime in the future we're going to have a close more than 2 standard deviations above the mean. And that's going to be up here, folks, at about 22,404. That's the first target that is more than 2 standard deviations above the mean. So if you believe in science, we all believe in all sorts of things. But if that's one of your belief systems, don't be the most surprised person in the world if the Dow finishes this epic rally that's been going since March 2009 with a blow-off top slightly above 2200. So you'll see the risk at the moment. Who was it? Let me just back up here. It was Ahmed. The risk is all to the upside, mate. There's no present downside risk at the moment. Minor for corrections. All these markets have corrections as they go. So I want to show you that, and I want to show you the S&P. I've done that. We were identifying that the enthusiasm is going to last for quite a bit longer. We've identified we're going to get at least a minor low in gold and T-bonds in the next few days, the next week at least, and that means we're going to get a top in the US dollar index. As I say, with this stuff, nothing in the Daniel Code speaks to quantum, but we get with the trend. We're always with the trend, so we're always making money. Okay, let's see what questions we've got here, folks. I guess you all Wednesday night. Tomorrow's your big day, eh? Wow. What's this? Rob, CNN, Orc Pond finds 53% Americans say they dread the thought of talking politics over Thanksgiving dinner on Thursday. Isn't that funny? I don't know what else you'd talk about. We talk about politics here all the time. The interesting thing, Rob, is that American politics is a whole lot more fun than our politics. I mean, our crowd over here are Turnbull and Co. dead as dodos, and the opposition are worse. So, yeah, we take a great interest in American politics. Here's Mike sent you an email. Oh, he's going to do the online tutorial. He's going to double up on that. One of the tutorial guys from LA. Mike, that'll be great. We'll get you roaring and flying. Janet's doing it now, as you know. Again, I think this is about number 4 for her. She's more excited than I've ever seen her. It's wonderful. Deck, he's the champion of the DC channels. Don't forget to take them off when you're not using them, Deck, or your computer will freeze up. And Albert, in regard to the current reversal in gold, will it hit your chart blue line numbers, 1177, 67, so and so before reversing? Let's just have a look. Deck, good night to you. I know you're leaving us. Let me have a look at the other chart here. So we've got, this was gold you want to talk about, Albert. Hi, Alice. Nice to have we've got a lady with us. Love having ladies with us. We don't have enough ladies. Bring your friends next time, Alice. we need lots of ladies in trading. It's funny in Japan, forex trading is completely dominated by lady traders. All the ladies there trade, but we don't sort of seem to have that culture in futures, and we don't seem to have many lady traders at all. So it's really nice to have you with us, Alice. Um, let's, um, let's see what we're doing with this goal question for Albert. 77, 67, 87, 77. Whoa. Gold. Is this gold? No, you might be talking about trying to do too many things at once here. Reversal in gold. Will it hit your chart blue line numbers? 1177. 1177. That's, oh, I see what you mean. I've got that one, yeah. 1167.8. That's the next one. You're running it down there. I've got you, Albert. Yeah, one of them, mate. We've got pretty much the conditions for a reversal now. It could be any one of those blue line numbers. And don't forget, I will the number of the charts I've shown you today are not updated, Albert. They're from the weekend, but I'll be updating those my today, your tonight, and there'll be new charts up on the website tomorrow, and you'll have a few more numbers there to follow. Tracking down. We can't ever actually tell which is going to be the number. What we can say is that the conditions have been satisfied. We have target recognition, which will hold the market for a few days. Even if the next day those numbers are not hit on accurately, the target recognition you already have will hold for another 2 or 3 days. It may go down lower. Anything may happen. We're only ever dealing with probabilities. But what I can say is we have all the conditions in place for at least a short-term reversal soon in gold and in T-bonds. So watch the Daniel Code signals. I'm just worried that it's going to do that reversal while I'm not posting signals, because tomorrow's a market holiday. Friday I don't post signals because we need a full day's trading to reverse it. So I want to just give you a heads up for that. Mr. J.R. Goatherder, do Aussies think Sarah Palin will be asked to be in Trump's cabinet? What post would be appropriate? Oh, well, I mean, I guess if he's talking about Mitt Romney, who's really the chairman of the Swamp Committee, anything's possible. Sarah Palin at least has been loyal, enthusiastic. I don't know that she's over-endowed with a cerebral matter, but she has been governor of Alaska, and she's been a beauty queen. That always ranks very highly with me. That gets plenty of marks for that. But who knows what Trump's doing? I mean, I was reading some critique of it today, and I mean, Nikki Haley was vehemently opposed to him. Romney was the worst of his opposition. He was vile about him. What is this? Bury the hatchet week with these people. Better off, in my view, to bury it in their heads. But anyway, he's a guy who was smart enough to make it in the toughest business in the world, property in New York, and to get himself elected against all of the geniuses. So I think we've got to have faith that there's some reason to what appears to Trump supporters to be rather unusual, shall we say. And he'll have an agenda. He may be a little sop to the Republican Party to get a few of them on side, but you can be sure it's nothing Trump does is random. He's got a plan. He's building to it. Okay, so here's Alice. Is the top in the DX in the next few days part of a longer-term trend? Are we expecting a trend change in the US dollar? I don't think so yet, Alice. Remember, just follow the Daniel Code members charts and signals. You'll be with the turn when it comes. But I think the US dollar has got further to go. It will probably have a correction when bonds and gold have their little correction. But I think US dollar has further to go to the upside. Can one learn the Daniel Code by subscribing to your website? You can learn a whole lot about it, JR. Excuse me, I've certainly had more than one person say everything you're going to learn is already on the website, and that's not true. everything that you're going to learn about trading price, most of it is already on the website, either in the articles or the videos. But what we're now working with mainly is trading time. And there is nothing about time signals on the website or in any of the public videos. So if you won't learn that from the website, but you'll learn an awful lot about trading price, and some of the signals, the TO3 signals, for example, do have an element of time in them. So you can start to see how they work from the website. But I don't post exhaustively signals. I don't post every signal for every market every day in the website. That's too much for most people. But if you're interested in being one of the world's great traders, drop me an email, and we will you'll be appointed as Secretary of Education. Ah, well, she was a Miss Alaska, mate. I mean, good sorts get marks with me. Anyway, well done, JR. Yeah, drop me an email, and let's try and set you up for a online video tutorial. They're going screamingly well. It seems to be having the recordings that folks can go over again and again is really working for them. All right, folks, so that's about it. Thank you for being with me today. You've all been marvelous. You've all pretty much stuck to the end here. And 7,500 US, and I can offer you terms if that's inconvenient at the moment, JR. Drop me an email, and I'll let you know what we can do for you. Thank you for staying with us today. It's Thursday already down here, down under. It's Thursday, just gone midday. So for those of you, you get ready for your Thanksgiving Day tomorrow and your feast and your family. I wish you all the very best happiness and joy, and enjoy the holiday break, because trading into the end of the year is going to continue to be fast and furious, just as it has been for quite a while now, which we love. So bless you all. Terry joins me in sending his best regards and wishes. I'll look forward to talking to you at our next webinar, which will be 2 weeks away. It's usually on a Thursday night. This one was moved forward because of Thanksgiving. And if there's anything really violent and exciting happening in the meantime, folks, I'll certainly put on a webinar at short notice. So do keep an eye on your emails and also on the Daniel Code website. So for me, it's off to the pool, or I could actually go to the beach, which is only 4 kilometres away, or 3 miles or so. But I think it'll be madly crowded. It's school holidays at the moment, so I think I'll head for the pool and some nice Bloody Marys, and I'll be drinking a toast to all of you very shortly. Glad you enjoyed it, folks, and enjoy your holiday break. And look forward to seeing you soon. Bye-bye. Cheers, Rob. All the best. Bye.